Let me tell you something wild that's circulating in the crypto space right now. A well-known crypto strategist has gone on record saying he's almost completely convinced that XRP could reach an eye-watering $100. Not someday far in the future, but potentially within the next phase of this market cycle. Now, whether that exact number happens or not, the real story isn't the price target. The real story is why people are suddenly making such bold predictions again. What's changed is this. For the first time ever, serious conversations are happening between crypto infrastructure and traditional financial giants. We're talking about stock market settlement systems, liquidity backends, and real-time transaction reconciliation. This is not about meme coins or hype anymore. This is about the pipes of the global financial system. At a recent industry event, a major stock exchange executive openly said that distributed ledger technology, basically blockchain, is expected to start settling parts of the stock market's backend through centralized clearing systems. That is a massive shift. And when people hear that, naturally the question becomes, which digital asset is actually liquid, tested, regulated enough, and trusted enough to handle something like that? This is where XRP keeps coming back into the conversation. Now here's an important distinction that a lot of beginners miss. Crypto in the past was driven mostly by speculation, FOMO, hype, sudden pumps, and brutal crashes. But once an asset starts being used for real-world utility at scale, price behavior begins to change. You get constant buy and sell pressure from actual usage, not just traders flipping charts. That's exactly what's happening with Bitcoin ETFs right now. High volume, lower volatility. The same logic could eventually apply to XRP if it becomes a true settlement rail for institutions. And when people say if XRP ever touches triple digits, it'll fall right back down, that assumption only holds true if it's still purely speculative. But once utility dominates, price doesn't behave like a pump and dump anymore. It behaves like infrastructure. Now personally, I think timing is where everyone gets burned. Some people expect miracles by this December. Others believe this plays out later, around 2026, when regulatory clarity fully solidifies and institutions finally move at scale. History tells us that timing is always harder than the thesis. Let's also talk about market psychology for a moment. Right now, fear in the market is elevated. When fear spikes, retail tends to exit, and historically, that's exactly when smart money starts accumulating quietly. That doesn't guarantee immediate upside, but it does explain why long-term players remain calm while everyone else panics. Another massive piece of the puzzle is stablecoins. Stablecoins are quietly becoming the Trojan horse of crypto adoption. People think they're just sending dollars digitally, but what they're really doing is moving onto blockchain without realizing it. Once someone uses a stablecoin for the first time, they're officially inside the on-chain economy. And now even legacy giants cannot ignore this shift anymore. The CEO of Western Union recently confirmed that they are actively exploring crypto on-ramps and off-ramps. Think about that for a second. A company built on money transfers is now forced to adapt because blockchains are eating their business model alive. Their stock has already taken serious hits over the past year, and that pressure is only growing. People won't walk into physical locations and pay large transfer fees forever when they can move money globally on a phone in seconds. Now, zooming out even further, what's happening at the corporate level is just as important. Ripple is no longer behaving like a typical crypto startup. It's becoming a full-scale digital financial infrastructure company. Treasury systems, custody, liquidity, stablecoin rails, enterprise payments, all building toward one unified ecosystem. If this continues, it's not unreasonable to imagine Ripple one day becoming one of the most powerful financial tech companies in the world. Some even compare its potential to what Amazon became for e-commerce. Now here's the uncomfortable truth many don't want to face. Institutions don't want retail owning large amounts of hard crypto assets directly. They prefer derivatives, ETFs, paper exposure. That way, they hold the real asset while the public gets synthetic exposure. That has always been the long-term strategy. This is why many veteran investors constantly emphasize one thing. Ownership matters. Not hype, not predictions, not price targets. Ownership. At the end of the day, nobody can promise you $100 XRP. Nobody can predict exact dates. Crypto will still have crashes, black swan events, shakeouts, and brutal volatility. That part isn't going away. But what is changing is the role crypto plays in the real world. Governments, banks, payment networks, and corporations are no longer asking if blockchains will be used. They're asking how fast they can integrate them. And that shift is the real signal. If you're thinking long-term, 5 years, 10 years, this space is still just getting started. Let me know in the comments where you personally stand on XRP. Short-term trade? Long-term hold? Or just watching from the sidelines? And remember, nothing here is financial advice. Always think for yourself.